So, as the world almost falls apart over the weekend, the market nearly fell apart last week as well. And the question that everyone on their mind must have now is, are we going to go collapsing tomorrow? Is open going to be a bloodbath? Is the level going to be violated? We're going to be talking about the one level that we have to pay attention to know if we're going to basically get that 15% rally to the upside or that 20% downside elevator. As everyone says, the bulls walks up the stairs, the bear flies out the window. So good morning or evening, everybody. Hope you're having a wonderful weekend. And if you have been living under a rock, Iran attacks Israel on raised fears of a wider war. Crazy times in the world. As we can see here, we got fear and greed smacking back down at 46 with tensions rising. So it's going to be a very, very interesting open, but in reverse repo hitting a new low. So jam-packed topics today. However, these are macro environments. We don't trade macro, we trade the chart. And what does the chart tell me? Well, we're going to be talking about that, but I do want to ease your mind a little bit. Markets have gone through crazy amount of tensions before, and the uncertainty could already be priced in because there's no larger escalation going on right now. Maybe there is fear of escalation. We could see crude jump to new highs, as we've been talking about crude for quite some time. We definitely could be taking out this 88. We could see crude at 90. So if we get a downturn in the market, crude most likely will touch 90 during this week. And we'll talk more about crude in just a second, but I want to talk about this one thing that happened this week on the market because that's what you're all here for. You're all here for finding out, do I need to hit the sell button? Do I need to hit the buy button? Do I need to sit on my hands? Well, the first thing you got to do is hit the subscribe button and have bell notifications on so you guys are notified when we go live for live streams this week, because it's going to be earnings this week as Q2 starts and lovely earnings season starts where we have to stream almost every day. So you can hear the joy in my voice. And if you guys would not mind hitting the like button, it lets us know that you like this video, you find value in it, and that you let YouTube know. So thank you all so much in advance. Now, enough jabber about what this and that. Well, first of all, S&P cash market did not close below the 50-day moving average. Congratulations, bulls, you saved the market. But we're going to be talking about some of the things you have to do and some of the things that happened this week. Well, first, let's recap what happened this week because we need to know what happened in order to learn from history. So besides the world falling apart on the weekend, we can see consumer trends kind of stayed in. We had a lot of Fed members talking this week. We did have various things come out, mainly CPI. CPI, basically, as we covered in the stream, was a bonkers number. However, it was very interesting to see some of these Fed members not really change their tune. We had oil come in hotter. Fed minutes, which really, like, if I showed you the chart for Fed minutes, you'd be like, where'd Fed minutes come out? Because usually it's a much more catalyzed event, but CPI stole the show like I predicted. PPI was a little bit interesting, right? So the year-over-year number came in 2.4 versus 2.1, so a hot number. However, core kind of just eased down a little bit. It really didn't surprise everyone, and we got some negative revisions previously. We got revised from 2.8, so it's a tick up, but it's not really a tick up in the broader sense. The month-over-month and year-over-year number did come in lower, so it kind of threw the market for a ringer because they didn't really know how to interpret this. However, they did have a bullish reaction on that Thursday. As we can see here, massive bullish reaction when that happened. And then as these tensions happened in the Middle East on Friday, well, you guess what? No news to really give you confidence. Consumer sentiment went down. A lot of bad news. Inflation expectations went up. So that combined with everything sent the market lower, and we did actually violate the weekly lower lows. So on the S&P, we actually have a weekly lower low close, which means that we're starting to get now 2 consecutive weeks where we close lower. That is a warning sign, right? So if we go to the weekly chart right here, we can see lower low and lower low. So that is a bad sign for the market, especially now that we see continuation. And as we covered in the last week in deep dive, the last time we saw this was back here where we got the start of the haircut. So that goes all the way back to July of 23. And we also had something similar back when we were in the 2022 market, where once we created 2 weekly lower lows, that's when you got the elevator down 1, 2, 3 times that happened. So we have to learn from history of what happens. However, if we look at these levels, we see that the 50-day was broken here, the 50-day was broken here, 50 was broken here, 50 was broken here. So you're starting to see a common trend that once you violate that last point of support, well, things get ugly, and it can get real ugly real fast. If we look at the broader range, there is nothing between almost an 8% drop between the 50-day moving average and the 200 where we would find support. That's a pretty massive haircut. However, let's not get ahead of ourselves, right? Let's talk about the levels that we have to hold this week, and let's start off with the S&P. So cleaning the chart up for you guys and looking at this, we pretty much have a nice wide range with some pivotal areas in between. So right now we're at 510.87, and we could break 509.08. And really, if we're breaking 509.74, if we see that print 509.73, I definitely think that's going to spell doom for the market. If we gap down and close down on Monday morning / afternoon, then I would definitely see the continuation, and I will have an update video for you guys talking about what levels we have to pay attention to, where we could find support, what can happen, right? However, if we don't get that scenario, and we're going to go into some evidence why I don't think that scenario is the likely scenario in this, we are going to have to get above 512.76. That was previous support, now is resistance. So once we get above 512.76, then we have to start rotating the 9-day moving average, sitting at the 516.79 level right here and near where we had the gap. So we could violate that level pretty quickly to the upside because it is a gap fill, meaning there's not a lot of price action there. And then 518.40, which was a pivotal point that we bounced off previously, could be a secondary resistance. And then 520.76 is going to be the level that, hey, once we get back up here, now it's safe to be bullish, and we can definitely then be setting up a massive A to B run on this move. So if we completely say that this latest low right here to this is our A to B, projects up to 540. So you're looking at, from where we are now, approximately a 6% upside to the market versus a 8% downside. So the risk to reward is definitely skewed to the downside if we look at it from, hey, where do I want to risk to reward? And really, the risk to reward is skewed in your favor to be bearish. However, the market has been running on this bullish sentiment, and if war cannot take us down, what can? What are the bears going to show up to in order to show strength in the market? We don't see the main thing is volume supporting this sell-off. Yes, we have more dominant red volume. However, we don't have these massive red volume spikes that we had here where we previously had the green days. As you can see here, these massive green candle days over here, that really propelled us up higher. We're not seeing anything that is averaging out higher on the volume. Everything is like peaking out around this level. So we have to just keep an eye on that. Yes, I know the red volume is slightly higher, but I want to see massive. I want to see stuff like this. This is what I want to see on the bullish team or the bearish team consecutively to really drive this market. So what was that piece of evidence that I was talking about that could say that we're going to get the bullish rotation? Well, let's take a look at the NASDAQ, right? So NASDAQ has been very, very interesting. We have not violated any of the levels this week. We basically coiled up on the NASDAQ, waiting to explode, and we have Netflix earnings on Thursday. So what more perfect week could it be of us bouncing not once, not twice, 3-4 times on the 50-day moving average, and then ripping up higher? That would be very, very key to the bull success in this market, getting above 440 again. That number has been drilled into our heads for weeks on end. And we have our dominant bullish uptrend right here in the range of support. So what do we have to pay attention to for the NASDAQ? Well, simply, guys, do we print a close below the 50-day moving average? That would be the line in the sand that needs to be crossed in order to start this debt spiral towards the downside. If you don't get that, then take your bearish theory and throw it straight out the window, please, because you don't have any evidence that it's coming true. Guys, I have my long-term bearish theory. I talk about the yield curve. I talk about yields. I talk about everything. We talk about JP Morgan earnings, how it's been he's basically saying the end is coming very soon. However, until the chart provides evidence that that rotation is happening, we can't base our trades off of it. We have to trade the chart, not what we think or what we suspect. So as we look here, 440, line of the sand, 438, nice sandwich, basically break above either level, you'll know which way, and continuation to the upside, 445.61, first resistance point, get above that, 450 most likely is going to come within range, breaking that blue sky breakout, continuation up higher. If we break 438.27, which is the 50-day moving average, then I'd be looking at 433.33 as the last support in this whole entire market before everything comes unwinding. Because if you look over here, this is a gap fill. There is no price action to save you. Once you're there, you will clearly violate your uptrend, and the bottom is going to be atrocious. Because if we look at the NASDAQ, it's even worse than the S&P. We are approximately 10% from our 200-day moving average where we would find support, and that would be a gnarly haircut. That would be a correction. We've kind of been needing one, in my opinion, to kind of even continue this bullish run, because some companies really are getting ahead of themselves. And that is what we're going to be paying attention to this week, and where we can look for to kind of see risk on, risk off. Well, let's take a look at Bitcoin, right? Bitcoin kind of indicating that, well, this war tensioning is going to maybe be a bearish sign. However, it has not violated that uptrend completely. So we have to say, okay, well, we got one close below a key level that we were trending at, right? So we were looking at this. We did close below it. However, is this a fake out? Is this going to rotate right back up on the next day? If we close below the 68,000 mark on Monday, then I would say, okay, S&P, NASDAQ, you're at risk for selling off. Does Bitcoin find support at its 50-day moving average? Then that's going to be another possible rotation. If S&P and NASDAQ don't violate their levels and Bitcoin's bouncing off 62,000 roughly, then, well, I'm going to say, hey, we could get that bullish rotation. But there's a lot of things. It's a very pivotal week. There's pivotal levels that the S&P cannot violate, Bitcoin cannot violate either, and VIX. Last but not least, VIX is looking like it wants to steal everyone's lunch. This was a massive spike on the VIX, and I would not be surprised if we get more and more bullish in VIX, especially with these tensions. People are going to be wanting to buy insurance, and insurance is still dirt cheap. The VIX is essentially me offering you fire insurance on your burning house, and I'm offering you for pennies on the dollar. So why wouldn't you go buy that insurance, right? So again, VIX really needs to get above that 20 level to really start cooking the market, but it definitely is something we have to keep an eye on. And last but not least, let's just take a look at yields, right? So yields should have dropped as predicted on the 30-year, hitting that upper channel and rotating down lower. That's going to be a sign that we could be rotationary back through, could be bearish for the market because everyone could be running to bonds, causing yields to go down. So we're going to have to keep an eye on that. I'll keep you updated on the next video for that. The 20 and the 10 all having similar prospects here, and the 2. The 2 is where it gets scary, right? So even though we had everyone running to bonds, the yield is still extremely high. It's above the 200-day moving average, the 50 looking like it wants to golden cross, and we've basically gone nowhere since December, November, when the Fed pivoted their stance of what they were looking in the future for. And this could be a very bearish sign because this is essentially higher lows and higher highs. So what does that mean for the markets? Well, it means higher interest rates for longer, which could affect corporate profits. As we saw with the bank earnings, it wasn't as stellar as everyone expected, and we did get some bearish reaction from it. But last but not least, we have to take a look at Daddy Oil. What is Daddy Oil going to do? I promised you guys I would cover oil as always. And simply put it, I do believe that we're going to complete this A to B pattern on the way up, rotating to $91 to oil prior to May. Especially with all these tensions, I would not be surprised that oil hits a peak of $90 in the coming weeks or even days. That would not surprise me. However, if we violate the $84 a barrel price tag, then we're looking at some lower support than we could consolidate down to. So keep your eyes peeled for that. Just don't go all in because I say someone that it's bullish, right? Do your due diligence and understand where the levels are and how you have to pivot off of them. So with that, guys, we're going to jump over to the biggest winners and losers, and then I will be back for the debate section. We're going to be discussing some of the news, how it can impact, and talk about a reverse repo as always. So Fatal, take it away.
So markets this past week have been in utter turmoil. The S&P 500 falling 1.58%, and on the one day as of Friday, we lost, actually majority of that losses were on Friday, 1.46%, especially after CPI coming in hotter than it was expected. When taking a look at this upcoming week's earnings, we can see that this is jam-packed, absolutely jam-packed. On Monday, we got the companies Goldman Sachs and Charles Schwab, which are the main two that really catch our attention. Tuesday, we got Bank of America, United Health, United, Johnson & Johnson, Morgan Stanley, and PNC. For the live stream on Tuesday, guys, we're going to cover Bank of America, United Health Group, and PNC. On Wednesday, we are also going to live stream, and we're probably going to cover Travelers as well as Discover. But on top of that, you got companies like Abbott Laboratories, Alcoa, Sands Las Vegas, Bancorp, and a few other ones as well. On Thursday, the big one, in fact, I think that this is the official start of Tech Week, which is, well, Netflix on Thursday, as well as TSMC with another company like Blackstone as well. And on Friday, we got American Express and Procter & Gamble. Now, looking into the actual S&P 500 heat map, you guys can see that this is an absolute bloodbath. Absolute bloodbath. The funny thing is that, well, as if you guys are watching this, y'all know what happened on Saturday. And we'll see how the markets react on Monday. But most likely, I think the markets are going to be blood red next week. We'll see what happens on Friday, though, right? We'll see what happens up until Friday. So, starting, of course, guys, with the technology sector. Worst performer here, it is none other than the company Arista Networks, losing 8.86%. And the best performer, it actually wasn't Apple, even though Apple did gain 4.11%. It was actually the company First Solar, gaining 4.51%. The communications sector, it is by far the easiest one to know which one performed the best, seeing that there's only two of them in the green here. Worst performer, though, it is the company Paramount Global, losing 8.44%. And there's only two companies here that gain, and those were Warner Bros. Discovery, only gaining 0.24%. But the big one that gained the most was by far Google, gaining 3.41%. Guys, remember when they crashed a few days ago? Well, congratulations. Now you're back up to almost $160. The consumer defensives also followed the same trend as the communications, with only two companies gaining. Worst performer, though, as you guys can see here in this whole entire sector, was none other than the company Dollar General, losing 7.38%. And the best performer, or at least the two of them that gained, were Walmart, gaining 0.5%, and Costco gained 2.5%. The healthcare sector, it is the bloodiest that we have seen so far, if I'm not mistaken. Wow, that's a lot of red. Worst performer here, though, it is none other than the company Solventum Corp. I don't even know what this company is. It's in the industry of health information services. Interesting. Losing 10.43%. And the gainers, guys, I believe I can only see around 3 gainers or so. And those were the companies of Revvity Inc. gaining 1.18%. We got Moderna gaining 2.2%, and the best performer, it is the company Pod Insulet Corporations, gaining 6.19%. Now, looking at the financial sector, the banks, or at least the main 3 banks, just had earnings on Friday: JP Morgan, Wells Fargo, and Citi. In the live stream, we did cover JP Morgan and Wells Fargo, and man, JP Morgan, whew. The funny thing is, the quick TLDR in JP Morgan is everything is in line with their guidance, but because it's in line with their guidance, the market took them down a lot. In fact, this is on the 1 week, guys. If we move this to the 1 day, JP Morgan fell on Friday alone with earnings, guys, 6.5%. That's really unwarranted. It really, really is, but it still happened. Now, what you guys can see, this whole entire sector is red. There's no company here that's in the green at all. Wow, that's kind of crazy. Worst performer, it is the company. Well, the company, I don't even know what this company is. Tell me if you guys are invested in this, because if you are, I really do empathize with you. Globe Life, ticker of GL, 45.5%. Wow. I have no idea what happened here. If you guys know, let me know in the comment section below. Now, the best performer, or at least the one that lost the least, was the company State Street Corp, which lost 0.03, essentially flat. And looking at the consumer cyclicals, this is by far the one that we have seen the most green in. Worst performer, though, it is the company KMX CarMax, losing 12.37%. And the best performer, by the looks of it, it is the company Tesla, gaining 3.73%. Now, looking into the industrials, most of these are in the red. Now, I do have to say this, though. Guys, probably this industry right here, the aerospace and defense, most of these are probably going to be in the green come Monday. Just you know, obviously you guys know if you're watching this what in the world happened. In fact, we'll probably talk about it during the debate, seeing that I am recording this a day before we actually do the debate. But yeah, this industry right here is going to be, it's going to be massively in the green if I have to guess. Overall, though, we can see over here that the worst performer was none other than the company Fastenal Corp, losing 8.06%, and the best performer overall in this whole entire sector, by the looks of it, it is the company Rockwell Automations, gaining exactly 2%. The REITs this week took a tumble, as you guys could see over here. Worst performer, it is the company CBRE Group, losing 7.02%, and the best performer, well, the ones that mainly gained were in this REIT residential. And as you guys can see over here, the best performer was this one, Avalon Bay Communities Inc. Don't know what this is. Gained 1.5%. And the utility sector, most of these once again are in the red. However, there's a very clear loser and a very clear winner. Worst performer, it is the company AES, losing 6.8%, and the best performer is this new one that was the whole splitting of General Electric, the company GEV, gaining 9.21%. Now, after CPI came out, guys, we clearly saw that energy is going to skyrocket, or if not, it already is, right? Especially with the whole Iran-Israel thing that just happened. I foresee crude oil spiking hard come Monday. And this will probably benefit a lot of these companies as well. However, though, when it came to this past week, all of them, or most of them, were in the red. Worst performer by far was none other than the company APA Corporation, losing 5.65%, and the best performer is the company EQT Corp, gaining 2.11%. And lastly, looking at the basic materials, most of these were in the red, all except for two. Worst performer, it is none other than the company CF Industry Holdings, losing 8.24%, and there's only two here that gained, one of them being FCX Freeport McMoran, only gaining 0.15%, and the best performer was International Flavors and Fragrances, IFF, gaining 0.32%. All in all, though, the main catalyst this past week was inflation. CPI data coming in real hot. Really hot, hotter than what they were expecting, which now they're thinking, the Fed's not going to cut interest rates. And I love it too, because Goldman Sachs pushed the interest rate cut date from June to July. So that's kind of hilarious. However, as of today, guys, I think that things are going to get a whole lot worse. Obviously, Iran attacked Israel, and we have no idea how things are going to retaliate. As if I'm recording this, it is 11:15 p.m. on April 13th. So who in the world knows what could happen? Who in the world knows how markets will react to this? We shall see. But anyways, that pretty much does it for this segment. Take it away, Mike.
So before we dive into all the Israel stuff, reverse repo, the broken index, I want to go through some of the news that's going to happen this week and kind of me and you talk about, do we see anything that's going to be like out of the ordinary that is going to be happening this week? So starting off on Monday, we got core retail sales, Empire State Manufacturing, and GDP Now from Atlanta. Couple Fed members speaking, so I don't see anything that's like groundbreaking there. What about you?
Oh, on Monday, the main thing that we got is mainly earnings for companies like Goldman Sachs, Charles Schwab, M&T Bank, First Bank. So a few of the regional banks are here. I think honestly this week, the main catalyst will definitely be obviously the elephant in the room, right?
Oh yeah.
But it'll mainly be like, the Bank of America earnings, Netflix, right? Those kinds of earnings. I don't think we're going to get anything else except for that. And or unless, World War III starts.
Yeah, I think you're going to get the first half of the week is going to be different from the second. I think Wednesday is going to be your pivot point.
I agree. Because starting Thursday, we begin essentially the tech week.
Oh,
You
yeah.
know,
We got also Daly speaking on Monday. Again, a couple of Williams speaks as well Monday, but he's usually been very, very like somber. He hasn't really talked about monetary policy. Jefferson speaking on Tuesday. We have building permits and house starts. I have never seen that move the market in any way, shape, or form. But
Well,
there is
go
someone
on.
talking on Tuesday.
Oh.
You know, gotta steal the show, Mister
Oh.
the main man, Jamie
After-
Powell.
After CPI, after inflation. Oh,
You know what he's
baby.
going to get. You know what he's going to get is the data supporting your conclusion now.
I think he's going to say. I think he's going to say, no, this is only 3. It'll be the inflation's transitory message, but in a
With
different
data
kind of way.
points.
It'll be right. Well, it'll be like, well, we've only seen this 3 times already, but that's not enough. We'll have to wait for more.
No. It'll be like, well, it's very hard to model inflation, and most people that model inflation have got it wrong. So therefore, these data points are wrong. It's like he'll twist, or he may not talk about monetary policy at all, right? This may be just a speech that he's coming out to talk about something else. So, but I find it peculiar how Powell's talking more and more now. I'm like, it's very job owning type thing.
Yep. No, I agree with that. I definitely agree with that. We're seeing a lot more of him.
Oh, yeah.
We'll see. I don't know. I don't think that we're going to get a rate hike anytime soon. But what matters is that not the banks, the markets think that we aren't getting a rate cut.
Well,
which I love it because
they think
we covered
that you're
this.
going to get July. Now they're kicking the can from June to July. The
Right.
problem is with July is if they don't cut in July, there's only 3 meetings afterwards that they have to cut each time, right? So it puts the narrative against the wall of like they miss one single one. There's no like forewarning that you're not getting this cut. So your expectations are completely broken.
And then on top of that, I believe that there is only 1 before the election, right? After July?
Only one.
Right.
That's right.
Yeah, there's only. Say that again?
Yeah, there's only one.
Okay. So, add on top of that Biden came out saying, I can guarantee you that there will be 1 rate cut this year. So, they are pushing the limits here, right? They're really pushing the limits here, which if we get 1 rate cut this year and nothing else, that will just show that the Fed, which let's face it, we already know this, but that will show essentially that the Fed isn't neutral, right? It's not a neutral party. So it'll actually make it worse for them down the line.
Yeah, the credibility will be lost completely. But I think their credibility is slowly going out.
And to be fair, hang on. And to be fair, in the live stream, we saw the James O'Keefe interview where essentially it wasn't a whistleblower, but it was like a hidden cam thing where the guy that writes Jerome Powell's speeches said, "Oh, Powell hates Trump. Like he wants to be the savior of the economy, and he's willing to do everything possible to screw over Trump." So now add on top of that as well. Oh boy.
Yeah, but the problem is if the data doesn't come out like they want it to, right? Even you can't manipulate the data. Like we know the CPI, we call it CPI, but you can't manipulate. Like you can't tell me oil goes up 10% and gasoline prices go down, right? Like no one will believe that. No one in their right minds. Like you can't make it so blatantly obvious. You can manipulate the data through sampling. We see that with food inflation, where depending what they sample, they can pick and choose and make it better. Shelter inflation is still a problem because there's no way to bias that number. Gasoline prices are still not able to be biased unless you change the weighting again, which, again, big black eye right now. And the data is not supporting anything, right? Powell would love to cut right now because then it would hand the election to Biden. But if the data comes out again like this, he's basically going to be like, yeah, man, I'm sorry. Can't do anything.
Well, let's keep on that track, right? Let's keep on that track. Guys, Iran bombed Israel yesterday.
Yep.
And I'm not sure what gas prices are going to do, but if history tells us otherwise, my suggestion, it's just a suggestion. I'm not telling anybody what to do. You may want to fill up your oil. You may want to fill up your cars. You may want to fill up your cars like before 6 p.m. You really might.
The other thing is that a certain banker said $100 a barrel crude by summer. I wonder what he knew.
Nah.
Because apparently he's right about a lot of
by the way?
stuff recently.
Who was that, by the way?
Jamie Dimon.
Yep, Jamie Demon. Yeah,
I love that nickname.
Yeah. I mean, this is kind of unprecedented, man.
Oh, yeah.
This is straight up. I mean,
and
that's what I'm saying.
The tensions are not going to stop, right? This is going to be because the culture is if your hand is cut off, it deems that you cut the other person's hand off. An eye for an eye is a saying that's in the Western world not really it's metaphoric. Whereas in this part of the world, because of how the culture has evolved, it literally means if they gouge out your eyeball, you go gouge out their face. There is a tick for tack. It is demanded by the culture. So with Israel...
I mean, also, well, hang on a minute. Let's also bring this to a biblical standpoint too. Israel is a Jewish state, right?
Yeah.
Well, the Old Testament, i.e. the Torah, does say in Leviticus, if I'm not mistaken, that an eye for an eye is warranted.
Yeah.
So it's not going to stop.
No, the culture has been boiling for decades there, and I'm like, this ain't gonna end well in any way, shape, or form. So, but let's just finish the news real quick, and then we'll dive into the Israel thing. Wednesday, crude inventories. I wonder what that's gonna do. Not help anything. A couple more Fed speakers. And then jobless claims on Tuesday with more Fed speakers. I'm like, is it just every day more Fed speakers? It's like, geez, guys.
Every week.
Every day.
Week at this point.
And then Friday. So literally after Powell, there is a nothing burger news. We get the Netflix earnings on Thursday. We get more earnings during the week, and then speculative positions, which they've actually been going down. They're at 60,000 now. So they've trimmed a significant amount, which is actually really good, right? Because it's an even side. Remember, once they started trimming, I said, you no longer have the fuel to keep going higher. It's now up to the bulls and the bears to step up. And we see we're just deadlocked, right? We're just deadlocked. We're fighting over these levels, which if you're a theta seller, my God, you're just making dough like no tomorrow right now.
Yeah.
But the problem is that VIX just wrecked everybody. VIX's spike blew everyone that sells options premium out of the water because volatility was at such a low level. Now it's at a high level. Yeah, you're just upside down on your any one option. And then if you're a buyer, you're getting screwed by theta, and then it equals out, so you're break even. So markets are just stealing everyone's money and running away with it. So
and they're not even open yet. So let's go back to the whole Israel thing. What do you think markets will do, or at least futures? How do you think markets will open today at 6 p.m.?
All right, so I'm actually going to open futures right here. I say we gap down about to the value area low. So I think you're going to get a 100 tick gap down.
100 tick. What does that mean?
Ticks are what's referred to as it's how futures move, right? It's every 25 cent move. Okay. So it's basically it's a $25 move down in futures. Okay. So 0.5%. I could see futures opening 0.5% and then us melting up the whole night. I could see us as everyone that's gonna get out gets out, and everyone's like, oh, we're at a low area, buy, all the way up. I think we go up in Asia. I think we go up in London.
Okay.
Because or now the flip side is right. If we dump and then something happens during the night, all that theory goes straight out the window because we need to be we actually, if we open red, there is now a 75% chance that you get the 10% correction that I covered. Mm-hmm. If you open flat, then you have a 50-50.
So here's the thing, right? Markets may be red, but you know what isn't going to be red?
Oil.
Oh, baby. Oh, dear Lord. This is going to spike up hard.
And here's the thing. I talked about A to B, right? A simple A to B pattern that completes at $92 a barrel. We could get there this week.
Yeah.
And
I mean, I even asked you on our Discord. I even asked you on the Discord $100 barrel when, and you said probably by May.
Yeah, mid-May.
And things are going to continue escalating. Maybe not exponentially, but things will slowly, I think, will continue. So
Yeah, but
it's going to be interesting.
Buy the rumor, sell the news. So
Yeah.
it's basically buy oil now, sell it once the tensions calm down.
So here's my question. Obviously, the market this week was blood red. By the way, if you guys saw my section of the S&P 500 heat map, everything was red. Pretty much everything. So did the needle move? Did the needle move? Are we back at fear? Wow, we're actually back to under neutral. It does not want to get to that left hand side of that.
No, it's like
of the semicircle,
you
huh?
shall not pass, and it's like
Yeah.
it's like ooh, the water's hot over here. Ooh, I don't want to be there. It's like
Yeah.
it's still broken, right? Like with this amount of tension in the world, we should be like slammed all the way over to the left.
Wait. I'm gonna stop you. Remember, this was as of close Friday. The news, the attack hadn't happened yet. So
I
for
know.
all we know, next week this thing could be at extreme fear.
It's a fair point, right? It's possible. We have to see, but I think as the markets found ways to twist news, I think they're gonna find a way to twist this one bullish.
I don't think so. Because
Yeah,
we
we'll
saw
see.
we saw what markets did when Russia invaded Ukraine. And yesterday, it wasn't just like a measly attack. This was over 200 drones and missile strikes.
Yes.
So, you know,
But the
I'm
thing
like,
is,
and on top of that, it was multiple countries being involved too. It was U.S. jets, not Ukraine,
UK.
United, UK, England fighter jets. France, I think, was also involved. It was insane. So, it got so bad that the Iron Dome of Israel couldn't keep up with all the drones. It was that much.
oh yeah, it's because again, Iron Dome was built many many years ago, and it's like drones are a new thing now. So it's like
No, and the Iron Dome can handle like a few rockets, not 200.
yeah.
You know.
But
So,
do you think
yeah.
that it's to wrap this up? Do you think it's going to be a run to safety to bonds? Do you think that we're going to see yields tick down lower, like on the 30-year, for example? Do you think we're going to get that rotation down now? Because we've been in this channel, and if it's a true fear, it's going to be a run to safety in bonds. Do you think we're going to get that rotation lower?
Probably. And let's actually take a look at really quickly Bitcoin, because Bitcoin does trade the market. I hate to say it, but Bitcoin, guys, because of all the derivatives, because of all the ETFs, Bitcoin is tied now to the market. It is no longer a hedge. So Bitcoin is down right now, $2,800, pretty much. So if this is any relationship to that of the market, then we're probably going to see a massive gap down, which would, yes, mean that yields are probably going to tank, right? Yields are probably going to tank because people are just buying into bonds right now. I honestly think that we could see that rotation, or the rotation could go into that of gold and silver, because gold doesn't trade 24/7, right? No, it does not. No. Yes, it does. I have here the last spot price was 414, which is today. So, yeah. Regardless, we might see a spike on gold as well, since gold is the hedge when it comes to all this stuff. But it's going to be a very, very interesting week. Nobody was expecting that, right?
No, that was a curveball out of left field.
Hey, by the way, I actually have an article pulled up right here. Oil is forecast to rise after Iran's attack on Israel that just came out today at 10:46 a.m. So,
You know what my response is to that?
Yeah.
Thank you, Captain Obvious.
Well, I mean, look.
Okay,
all I'm saying is,
if you can't, anyone that trades oil understands when you bomb the Middle East, oil goes up. Just look
All I'm
at
saying
every
is-
single war in that area for the last history and look at oil prices. I'm like, a 2-year-old can tell you that.
all I'm saying is, guys, we don't know what oil's going to do at open, but you may want to fill up your gas tanks before 6 p.m. That's all
The
I'm
gas
gonna
prices
say.
already probably changed. They're already pricing that in.
Not here. At least not where I'm at.
All right.
Not where I'm at.
Give it another
So-
hour. Give it another hour.
Another hour. So guys, we'll see what happens this week. It is jam-packed, and now add on top of earnings, add on top of inflation, now add geopolitics and wars in the Middle East. Oh boy. 2024 is has been so far an insane year, and we're not even in October yet.
We're not even halfway.
If this is like a not a prerequisite, but if this is for like a thing for things to come, I don't want to know what's going to happen in October. I really don't. It's going to be bad. But guys, I think those are pretty much going to end it right here. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And we will be live streaming Tuesday, Wednesday, and Thursday of this week covering the earnings. So make sure to stop by there, 7 p.m. Eastern Standard Time on either YouTube or Rumble. We appreciate it more if you guys were to do it on Rumble. But if you guys prefer YouTube, that also works as well. Also, make sure to follow us, or at least join the Discord that will be linked in the description below. It's free to join. And, if you guys have any questions for us, you don't have to wait for like a video comment on the video. You guys can just talk to us there. So thank you so much for watching. Peace out, and we will see you all next time. Stay safe.